Tensions are rising in Eastern Europe as leader Vladimir Putin sends an estimated 130,000 troops alongside its border with Ukraine. This action has made the Slavic nation, as well as the rest of the world, suspicious of an imminent invasion. What will this ultimately mean for the financial health of the global economy? In today's video, we're going to be talking about the crisis currently happening between Russia and Ukraine and what that means for the global economy. But before we begin, make sure to like, subscribe, and hit the bell icon for notifications. Let's get into it.
Western leaders say that there is no evidence that Russia is withdrawing its troops from Ukraine's border and that the threat of invasion remains high.
Wars are an extremely expensive game. Governments will tend to spend exorbitant amounts of money to fuel war efforts. To put things into perspective, so far the US has spent an estimated $6.4 trillion on wars post 9/11. Russia has been gathering thousands of troops near the Ukrainian borders since late 2021. The Kremlin has made claims that it doesn't actually have any plan to invade. However, the US government has warned that a Russian military invasion could still occur at any moment and that Ukraine should brace itself. But, as you might have guessed, it's not only Ukraine that's taking that advice. Financial experts and novice traders alike have also braced themselves, with a massive sell-off happening since news of this tension came to light, inciting a great deal of volatility in the stock market. Government Federal Reserves have also braced themselves as they are well aware of the financial effects that war can have on the global economy. But how did it all start? Well, this situation that's happening in Eastern Europe is probably one of the most high-stakes manifestations of Ukraine's over 30-year history of being torn between Eastern and Western influence. Since the 90s, Ukraine has been wavering between the power of Moscow and the US with the help of European allies. Through many major scandals, conflicts, and several protest movements in its history, Ukraine has been able to maintain its democratic government, while at times wavering between the sides of pro-Western leaders and leaders aligned with the Kremlin. But now, Ukraine and its people face its biggest test as Russian forces close in. Since the illegal occupation of the Crimean Peninsula in 2014, Ukrainians have turned away from supporting the Russian government and have turned toward Western powers, with majority support on the rise for aligning with Western powers such as NATO and the European Union. Russian leader Vladimir Putin has claimed, without much solid evidence to back it up, that an alleged genocide is occurring in the eastern Donbas region of Ukraine, where Russian rebels have been fighting a war with Ukrainian forces for almost a decade. The genocide is claimed to be targeted towards ethnic Russians, but again, there's no solid evidence to support this claim. This assertion is one that even the US has adamantly rejected. And to that effect, President Biden has warned that as a result of this conflict, the American economy would suffer greatly from disruption to energy supply and sharp price increases in the likely event that sanctions were put against Russia in response to any invasion of Ukraine. Global stock markets have already fallen sharply as fears of military conflict in Ukraine made investors fearful, wiping over £53 billion off the value of the UK's blue chip share index. European markets tumbled by nearly 4% in one day, the lowest level since October of 2021. This has been the market's biggest one-day drop in more than 18 months. The plunge in value came after NATO deployed 8,500 troops to the Ukrainian borders as a Russian invasion appeared increasingly likely. Oil prices have also suffered as a result of this possible crisis, scaring off more than 3% as investors gauged the impact of easing Russia-Ukraine tension against a taut balance between tight global supplies and recovering fuel demand. They have recovered slightly, but they're not in the clear just yet. Russia is responsible for a third of Europe's natural gas and about 10% of global oil production. As a result, anything that threatens the peace of the Kremlin may have a sharp effect on the global oil price. In fact, the effect is already being felt as financial analysts have said the Ukraine crisis has accelerated the move in crude prices towards $100 per barrel, as the potential war has left the oil market extremely tight. The jump in the oil price threatens to push fuel prices higher in the coming weeks, with UK gas prices hitting record highs since Russian troops were deployed to the Ukraine border. While no one can be sure how events will unfold, history suggests that whenever there is geopolitical conflict, financial markets have reacted the most when energy prices shoot up and the Federal Reserve tightens monetary policy. This lesson was first learned during the world's first two oil shocks in the 70s. The first spike occurred in 1973 when the Organization of the Petroleum Exporting Countries imposed an oil embargo against the United States in retaliation for the U.S. supplying weapons to Israel during the Arab-Israeli conflict. Looking at U.S. military conflicts after World War II, it was found that in cases when there is a pre-war phase, similar to the threat of invasion on the Ukraine border, there tends to be a decrease in stock prices, shooting back up when an ultimate outbreak of war occurs. However, in cases when a war starts as a surprise, the outbreak of war decreases stock prices. This financial phenomenon is known as the war puzzle, and there is no clear explanation as to why stocks increase significantly once war breaks out after a pre-war phase. That being said, the Russia-Ukraine border crisis complicates the near-term market outlook. Some investors have rushed to safe haven assets, such as Bitcoin plunging to a 6-month low of about $33,000, less than half of its all-time high of $69,000 that was reached last November. There was heavy selling in Russia's stock market as a result of rising tensions, with the MOEX index of Russian companies plunging almost 6% to its lowest level since December 2020, dealing with losses up to almost 15% in 2020 alone. The Russian ruble hit a one-year low, dropping in value to 80 rubles to the US dollar. As a result of this, the Bank of Russia said it would be halting purchases of foreign currency in an attempt to relieve some pressure on the ruble, which has slumped since March 2021. The threat of impending war has threatened many other industries as well. Cybersecurity firm Darktrace was down 14.6%, newspaper publisher Reach fell 11%, and the cinema chain Cineworld and the luxury car maker Aston Martin dropped nearly 9%. It's obvious that financial markets have made a volatile turn this year, and it has investors reassessing the possibility of inflation increases and financial tightening by the Federal Reserve. Another unknowable factor is what the exact response from it and trigger a massive stock market sell-off. The biggest issue for the average consumer will be the ambiguity surrounding the rising energy prices. President Biden made clear the U.S. still strives for a peaceful and diplomatic de-escalation, hoping that Putin decides against invasion. From increased military aid for Ukraine to coordination with European allies and others on sanctions, Western powers are ready to defend Ukraine in any way they see fit. Since the Russian buildup of over 130,000 troops began, Western allies and partners have come together quickly to prepare over a year's worth of sanctions work, including export controls that potentially have the power to devastate Russia's economy. But even with threats of sanctions, the U.S. is still concerned that Russia could continue to maintain its troop buildup and use other ways of pressuring Ukraine. These actions that Russia takes could potentially splinter the Western coalition's unity. Some financial analysts are concerned that threats of sanctions just won't work on a global superpower such as Russia. It's not that they won't affect them in terms of numbers, but the Russian government is known worldwide to be a particularly stubborn state, which with added pressure could lead to a potentially devastating confrontation on the ground and within the global economy. What do you think about this Russian-Ukraine standoff? Do you think the global economy will recover soon from this? Let us know what you think in the comments section below. And if you enjoyed the video, please hit the like button. Don't forget to subscribe and hit the bell icon to be notified whenever we post new content. Thanks for watching, and we'll see you in the next one.